The latest inflation data is about to drop any second. This is from the December quarter. And joining me now, our business editor, Ross Greenwood. Ross, the button will be hit any moment. Talk us through what we're about to hear and what we're expecting.
Well, in fact, was expected to see the peak in inflation, which has just been announced at 7.8% annually, up from 7.3% previously. The market had forecast that inflation would come in at 7.6% today. But what's happened is a range of different factors have affected the price of goods during that not only quarter, but over the past 12 months, which of course includes energy prices. People are well aware of these, but also the price of transport, but then fruit and vegetables on top of this. Now, this, of course, will continue to put pressure on the Reserve Bank to keep raising interest rates. Before this announcement came out just in the last couple of seconds, the chances of a rate rise coming into the first decision from the Reserve Bank in February was put at some 54%. Here is the numbers that we're seeing it. So the forecasts were below any of these actual numbers that have come out. The annual rate at 7.8%, the quarterly rate at almost 2%. You can see there up by 1.9%. But the important part about this is that Treasury thinks that this could almost be the peak of inflation in Australia. Just to explain, if say prices rose by last year, you can see there 7.8%. The fact is that even though you might be paying those same high prices this year, if they don't keep rising, then inflation ultimately falls. And it's when that inflation falls that the Reserve Bank can take a little bit of its foot off the pedal when it comes to rates. Now, here's an important factor of this, and that is that for the quarter, the trim mean is down by 1.7% and annually up by 6.9%. So again here, that 6.9% for the trim mean is really where the Reserve Bank is focusing. It takes out the one-off factors, and that's another reason why, again, the markets will be anticipating future increases in interest rates, perhaps even higher than many of the current forecasts, around 3.85%.
Well, that's going to be the big question leading from all this, Ross. It's an interesting decision for the RBA because this is a little bit higher than expected, and this is a higher quarterly rate than last quarter. That will be the concern, I guess, from 1.8 up to 1.9. But there are already warnings about the fact that we've got such a lag factor. There are a record number of people that have been on fixed home loans that have been coming off them. So, them feeling the pinch of that is going to be somewhat delayed. How much do you think there is a bit of a warning for the RBA? How seriously will it take that, or how much pressure is there in this figure, I guess, to just have to increase rates?
OK, so just think about what we're seeing in Australia right now, and that is that we've had come through a very, very strong period of Christmas retail sales. People still have money to spend, be it on holidays, be it on travel, be it on food and goods. Now, at some point, the combination of higher interest rates, all of those people coming off fixed rate mortgages, plus on top of that, you've got this situation whereby you've got energy prices in particular catching up with families. The real concern is that there's a point in the middle of this year where the consumer basically hits a brick wall and consumer spending starts to fall. Now, that's an impact that you really don't want. You can see here straight after this announcement, these are live prices coming in from the ASX. It's down by more than 1/3%, and you can see that fall has come off the back of this. So that is really the stock market reacting to the expectation of more interest rate rises from the Reserve Bank. The second thing is have a look at this consistent increase in the inflation rate right throughout this period, 7.8% currently. And at some point, it's got to start to come off. The problem is that even though inflation might be coming down, you and I are still going to be paying elevated prices compared with a year ago, because even though inflation might be running at 0 or 2 or 3%, the fact is we're still paying higher prices, which is taking more money out of our pockets. That's a concern for the economy. That will be a concern for the Reserve Bank, which at some stage has to ease back on these interest rate rises. They've got one quest not to curb inflation, but the other one is not to trash the economy. So that's important. And have a look here also, the Australian dollar, which has jumped above 70 US cents for the first time in 5 months, just in the past day or so, on anticipation of these inflation numbers. Again, up almost 1/3% here, and strong and rising now. And the reason for that is the anticipation of higher interest rates.
Yes, exactly. So that's the market basically pricing in the next increase, and maybe, as you alluded to, pricing in more overall increases, where we top out at 3.1% at the moment. The official cash rate, 3.85, the sort of rough, if you like, amount that most are expecting it to get to. I do wonder as well how crucial we're going to see that the monthly inflation data. This is relatively new from the RBA because we know inflation is a lag indicator. We know it's quarterly, Ross, so it means, you know, when every month matters, and we don't want to go too far on rate increases and crash the economy unnecessarily. But the question is there confidence in this monthly figure? Because that one has bounced around a bit more. Is that one the RBA can have a small increase at its next meeting and then really look closely at that monthly figure and see if it's coming down? Is there confidence in that figure?
I think so, and I think there would be confidence in that number. After all, it was the Reserve Bank who called for it, who said it's crazy that most developed nations around the world have that number, but Australia really was hamstrung with these quarterly figures. A couple of little interesting points I'm just noting popping out from this, these numbers today. One of the biggest increases in prices over this period has been the cost of travel and accommodation. So there is one little interesting factor. So just in time for Christmas, families are being whacked with higher travel prices for airfares, but then also for accommodation. Electricity, no surprise here, up by 8.6% during this period. Even international holidays and travel up by 7.6%. New dwelling purchases up by 1.7%. Building costs rising. But then another little one, again affecting families. During this period, the price of clothing and footwear up by more than 2.6%. So, you know, these things really do sort of, if you like, start to bite in to the consumer. And it's really when it starts to bite that the Reserve Bank will then be able to take its foot off the pedal with these interest rate rises, and that also should be the period at which prices start to come off and start to fall. And so one thing, say for example, used cars. Last year we saw massive increases in the price of used cars, but as the supply of new cars has now come back into Australia, those prices are all starting to ease off. So, you know, this is a story about not just 1 year, but just looking out into the future as to what the behaviour of people will be, and then also the supply of goods and materials into our economy.
So it seems we can basically lock in another rate rise at the next meeting of the RBA, and then from then on it's a month-to-month watch?
I think that's pretty much it. There's a point at which the Reserve Bank sits back and waits. But right now the markets are locking in another 0.25% rate rise at least, and then perhaps at least another one maybe afterwards. But then maybe they start to sit back and have a look. But that peak, 3.85%, remember, is still significantly higher. It's anticipating another 3 rate rises at least before this cycle stops. But now many of the bank economists are saying that they believe that might be a bit conservative, that maybe the Reserve Bank needs even one more rate rise on top of that, just to make certain that the inflation is stone dead.
Ross Greenwood, the very latest on a figure that's going to have a big impact on today's news. Thank you.